Most people have no idea that one of the world's most important resources is quietly becoming harder to find. And unlike oil, natural gas, or even food shortages, this problem isn't making front page headlines, because the metal we're talking about isn't just a precious metal. It's silver. The same silver used in smartphones, electric vehicles, solar panels, military systems, artificial intelligence infrastructure, medical devices, and power grids. What if I told you that the world has now experienced multiple consecutive years where silver demand has exceeded supply? What if the metal modern civilization increasingly depends on is being consumed faster than it can be replenished? And perhaps most importantly, what if very few people are paying attention? Because here's what's really happening behind the headlines. The world is entering a period where energy security, technological competition, and economic uncertainty are colliding simultaneously. Inflation remains a long-term concern. Global debt continues to rise, supply chains remain fragile, and governments everywhere are racing to secure strategic resources. Most investors are looking in the wrong place. They're watching stock indices, interest rates, and cryptocurrency charts. But beneath the surface, a much bigger story is unfolding. Silver is becoming a strategic resource, and few people understand the chain reaction that could unfold if supply struggles to keep pace with demand. Today, we're going to connect the dots. We'll examine why this matters. We'll explore the hidden supply problem. We'll uncover how industrial demand is changing. We'll see what history teaches us. We'll understand why governments and institutions are paying close attention. And finally, we'll discuss what all of this could mean for ordinary people. Because this isn't about predicting a price target. It's about understanding a changing world. And once you see the bigger picture, you may never look at silver the same way again. Let's begin. Here's what most people don't realize. The silver story isn't about a sudden shortage where mines simply stop producing. Think of the global economy like a giant machine. Every year, industries require enormous amounts of silver to keep operating. But for several years in a row, more silver has been leaving inventories than entering them. According to data from the Silver Institute, the market has experienced multiple consecutive supply deficits, meaning demand has consistently exceeded available supply. The mainstream media rarely discusses this because silver is relatively small compared to global equity or bond markets. But that small size is precisely why it matters. Small markets can become volatile when supply and demand move out of balance. Imagine a city that consumes more water than its reservoirs can replenish every year. Initially, nobody notices, but eventually, those reserves begin shrinking. That's essentially what's happening with silver inventories. If you're interested in understanding the forces shaping precious metals and the global economy, consider subscribing. I post videos like this regularly. Now, this doesn't mean civilization is about to run out of silver tomorrow, but it does mean the margin for error is becoming thinner. And in a world already dealing with geopolitical tensions, trade restrictions, and fragile supply chains, thinner margins deserve attention, because strategic resources become far more important during uncertain times. So where exactly does silver come from? This is where the story gets even more interesting. Many people assume silver miners can simply increase production if prices rise. Unfortunately, it doesn't work that way. Nearly 3/4 of global silver production comes as a byproduct of mining other metals like copper, zinc, and lead. In other words, silver production often depends on entirely different industries. Imagine trying to fill a swimming pool while someone else controls the hose. Even if silver demand explodes, production can't rapidly increase because miners are responding to copper or zinc economics instead. Mexico remains the world's largest silver producer, followed by countries like China, Peru, Bolivia, and Chile. But these regions face growing challenges. Ore grades are declining, energy costs have risen, environmental regulations are becoming stricter, political uncertainty can delay new projects, and building a new mine can take 10 to 20 years. Think about that. The technologies driving demand are evolving much faster than the mining industry can expand supply. Meanwhile, geopolitical fragmentation is introducing additional risks. Countries are prioritizing domestic resource security. Export restrictions are becoming more common. Even India recently tightened silver import regulations, highlighting how governments are becoming increasingly sensitive to strategic commodity flows. These are subtle warning signs, not a crisis, but certainly signals worth watching. Now let's discuss demand, because this is where the silver story truly transforms. Silver is no longer just jewelry and coins. Silver has become a technology metal. It possesses the highest electrical conductivity of any metal on Earth. That's an extraordinary advantage. Solar panels require silver. Electric vehicles require silver. Artificial intelligence infrastructure requires silver. Data centers require silver. Telecommunications require silver. Defense systems require silver. According to industry research, industrial silver demand has reached record levels in recent years, driven by solar energy, automotive electrification, power grid expansion, and AI-related applications. This changes everything, because unlike decorative demand, industrial demand is tied to infrastructure build-outs. Governments around the world have committed trillions of dollars toward energy transitions and electrification projects. These projects don't simply disappear because silver prices rise. That's what makes this dynamic different. If this analysis is helping you connect the dots, subscribe and join our growing community here at Precious Metals Alert. We're witnessing the transformation of silver from a precious metal into a strategic industrial resource. And strategic resources behave differently over time. History rarely repeats perfectly, but it often rhymes. Let's go back to the 1970s. Energy shocks triggered inflation. Commodity prices surged. Investors sought hard assets. Then came 2008. The financial system experienced immense stress. Central banks responded with unprecedented monetary stimulus. Then COVID arrived. Global supply chains fractured almost overnight. Factories shut down. Shipping routes stalled. Entire industries discovered how vulnerable interconnected systems had become. And then came the famous silver squeeze movement. Although the event itself didn't fundamentally alter supply and demand, it demonstrated something important. The silver market is relatively small. Small markets can react dramatically when investor attention suddenly arrives. History teaches us that periods of uncertainty tend to elevate the importance of tangible assets, not because they are magical, but because they cannot be printed. Physical resources remain physical resources, and today's environment contains echoes of previous eras. High debt, geopolitical tensions, persistent inflation concerns, supply chain vulnerabilities. None of these guarantee future outcomes, but together they create conditions worth monitoring, because markets tend to reprice risk suddenly rather than gradually. One day, nobody cares. The next day, everybody notices. Now let's talk about smart money. Central banks themselves aren't major silver buyers. Their focus remains primarily on gold. But the bigger story is why they're accumulating hard assets at all. Around the world, governments are becoming increasingly aware of resource security. BRICS nations continue exploring alternatives to excessive dollar dependence. Government deficits remain enormous. Debt levels continue climbing. The IMF, World Bank, and numerous economic institutions have repeatedly warned about rising sovereign debt vulnerabilities and fiscal pressures worldwide. Meanwhile, investors are seeking diversification. Family offices are increasing exposure to real assets. Institutional investors are paying closer attention to commodities. The reason is simple. The world is changing. A system built on inexpensive energy, abundant globalization, and low inflation is transitioning into something new. If you're finding value in these deeper macro insights, consider subscribing because we cover the stories mainstream media often overlooks. Silver sits at the intersection of multiple megatrends: technology, energy, geopolitics, and monetary uncertainty. That's a powerful combination. Finally, let's discuss what this means for ordinary people, because ultimately, this isn't about silver itself. It's about preparedness. It's about purchasing power. It's about protecting savings over long periods. No one can predict the future with certainty. Nobody knows where silver prices will be next month or next year. But understanding the forces at work allows people to prepare rather than react. If inflation persists, purchasing power erodes. If debt continues growing, monetary systems face increasing pressure. If supply chains remain fragile, volatility becomes more common. These aren't reasons to panic. They're reasons to become educated. Diversification matters. Long-term thinking matters. Risk management matters. Patience matters. And perhaps most importantly, avoiding emotional decisions matters. Silver should never be viewed as a guaranteed path to wealth. Nothing is guaranteed. Instead, it can be viewed as one component within a broader strategy of resilience, because resilient people adapt to changing environments. And that's exactly what we're discussing today. Adaptation, not speculation. Understanding, not fear. Preparation, not prediction. As we conclude, let's return to the original question. Are they running out of silver? Not exactly. The world isn't about to wake up tomorrow and discover all the silver is gone. But something significant is happening. The balance between supply and demand is tightening. Industrial demand is becoming more important. Mining expansion is difficult. Geopolitical risks are increasing, and strategic resources are moving back into the spotlight. Markets move in cycles. Headlines come and go, but the laws of supply and demand never disappear. That's the lesson history teaches us again and again. The biggest opportunities often emerge long before they become obvious, and the biggest risks often remain invisible until they're impossible to ignore. Silver may ultimately become one of the defining resources of the coming decade, or perhaps supply eventually catches up. Either way, the story deserves attention, because the world is changing faster than many people realize. Pay attention to the trends most people ignore, because sometimes the biggest opportunities emerge long before the crowd notices. If you found this analysis valuable, please like the video, subscribe to Precious Metals Alert, and share it with someone who wants to understand the changing world around us. Until next time, stay informed, stay prepared, and keep your eyes on the metals.